Germany is one of the highest tax countries in the world. Investopedia believes employees in Germany pay 39.4% of their income to the government. Other websites believe 47.5%, and the highest we could find was 49.4%. Is that true? Do you really have to give 50% of your hard-earned money away in taxes, social security, and all other deductions? Not even close. All these websites are wrong by a mile. Because taxes, social security, and all other deductions continue to break all records here in Germany. You want to know how much you really pay to the government and why today, July the 9th, is still a day to celebrate? Then this video is for you.
PerFinEx, Personal Finance for Expats.
What's up everyone? Welcome to a new PerFinEx Explains from PerFinEx, the #1 English-speaking and independent financial planner in Germany. My name is Axel, and today I'll PerFinEx explain to you why we can all celebrate today. Because today is the first day of 2021 that you actually get to keep the salary that you earn from working here in Germany. Everything you did earn this year does not belong to you. You have to give it away to the government. Everything you start earning today until the rest of the year will be yours. 100%. Feels good, right? And that's the definition of the unofficial Tax Freedom Day created by the Association of Taxpayers to show the German population, us, how high the deductions from our salary really are. A day that used to be in May. But since tax rates and social security contributions continue to increase almost like real estate prices, Tax Freedom Day is now in July. That's 2 months later. Last year it was in the beginning of July because of the value-added tax decrease during the pandemic. But since that's off the table again, and we're all paying 19% value-added tax again, this year's Tax Freedom Day will probably be in mid-July again. We'll see what the Association of Taxpayers will calculate next year, because about 90% of employees in Germany are not paying solidarity tax anymore. But what are all these deductions from your salary really? Basically 3 big ones. Let's see what these 3 deductions are in the first part of the video, and in the second part we'll see how you can increase your net income again. Let's take the example of a regular employee making 56,985 euros in gross salary. That's the average German salary determined from over 250,000 German jobs by Stepstone in our best paid jobs in Germany video. So if you would like to increase your salary, check out the video with cool tips. Because the more you earn, the more you get to keep for yourself. Even with all the deductions that we're going to see now. Let's start with the deductions from your payslip that happen right away without you even getting the money. Not sure how to read your payslip? Then check out this video. Link to all videos that I mention are in the description. When earning 57k gross salary here in Germany, you have to pay 10.5k in income tax. That's 19% of your salary straight to Finanzamt, or 19 cents out of every euro that you earn, which is actually a pretty low tax rate. Income tax can be as high as 42% here in Germany. Check out this video with all the details on German income tax. On top of that, you might have to pay 8% or 9% in church tax, depending in which German state you live in. That will be another cent in deductions from your 1 euro salary. Luckily, with this income, you don't have to pay solidarity tax anymore. If you have a higher income, you might still have to pay solidarity tax despite the tax cut last year. Check out this video with all the details. That sums it up for the tax deductions. Just 20%. So not that bad, is it? Meaning you get to keep 80 cents out of every euro that you earn. But that's not all, of course. Now we come to your social security contributions. That should be the same percentage for everyone watching. With our example income of almost 57k gross per year, you have to pay 441 euros in public pension as the largest part of social security. That's a lot of money that you can probably kiss goodbye. See you later. Because payout from German public pension will probably be much less than you contribute. That's why... Give me just 30 seconds before we continue with the video. I'm currently planning my PhD that will revolutionize the German public pension for you expats. You pay in almost 20% of your salary but get out very little. We want to change this, so you can have a secure retirement. Please take 10 to 15 minutes and answer the easy questions in our survey. The more of you participate, the more we can pressure the German government to change our public pension system for the better. Links in the description. Thank you very much. Now back to the video. If you want to know what you might get out of the public pension, check out this video that explains the letter they send you every year. And then, when you know that it will not be enough, check out these videos on the German pension system with much better alternatives. German pensions can be pretty cool with tax deductions, ETF investments, multiple options to choose your payout. It's just the public pension that sucks, big time. Next part of Social Security is unemployment insurance that costs you roughly 1 cent out of every euro you earn. Unemployment insurance might pay you some money in case you lose your job, not if you resign yourself. Why might pay you some money? There's lots of other rules that have to apply in order for job center to pay. Of course, because in Germany everything has very strict rules. Health insurance, for example. That's another 8% that is deducted from your salary if you're a member of the public health insurance system. If you're wondering why health insurance contributions are suddenly much lower than in our other videos, it's because now we only look at your 50% of Social Security contributions. As German Social Security is split 50-50 with your employer, whatever you're paying, your employer is paying the same as well. And if you're wondering if you can pay less for health insurance than 8%, it's certainly possible. You can either switch to a more efficient public health insurance company that charges a smaller additional contribution, or you switch to the private health insurance system if your gross salary is larger than 64,350 euro in 2021. Just a couple of weeks ago, we made this video showing you that private can have a much better healthcare for a much more affordable price. How is that even possible, you might ask? Better coverage for a lower price? It's because every private company wants to make money, and therefore they have to offer the best product or service possible at the best price. Private companies are competing for customers. Government just forces all of us to pay taxes and can be wasteful with our money. And if you don't believe me that taxes are forced, try not paying income tax and see what happens. No, please don't do that. And if you don't believe me that the government is wasteful with our money, just take a look at the Black Book of the Association of Taxpayers that shows the largest tax dumps of our government. It's from the same guys who created this Tax Freedom Day. Attached to health insurance is long-term care insurance. So when you're a member of the public health insurance system, you are also a member of the public long-term care insurance. And private health insurance means private long-term care insurance, which is also cheaper. Who would have guessed that, huh? Generally speaking, long-term care insurance will pay at least a share if you are old and need assistance at home or have to move in a long-term care facility. These are the 4 pillars of the German Social Security system. There's a 5th pillar, the accident insurance. But that one is paid in full by your employer, so no deductions here. Lucky you! Just in case anybody's wondering, as an employee you are forced by the government to pay into Social Security. There's no way to get out. As a self-employed person or a business owner, you can choose to exit Social Security. You only need to have health insurance and long-term care insurance. That's mandatory for everyone. And that, ladies and gentlemen, wraps it up for deduction 2 out of 3 for every euro you earn here in Germany. Coincidentally, Social Security is also like taxes, 20% in deductions. And that's really a coincidence because of the 57,000 salary. Social Security is always roughly 20%, but the tax rate will differ. The more you earn, the higher your tax rate. And now we come to the last part of deductions that most people seem to be missing. Deductions 1 and 2 were taxes and Social Security that is basically deducted from your payslip. So we went from gross salary to net salary. Zip! 40% gone. But that's not all. Because if you want to buy anything with your net salary, you have to pay additional taxes. And that's what a lot of people seem to be missing in their calculations. First of all, you have to pay value-added tax. For basic food or basic consumer goods, we only have to pay the reduced 7% value-added tax. That's for potatoes, milk, bread, books, public transport, and a lot of other basic stuff. For everything else that is considered a luxury, we have to pay 19% value-added tax. And since it's tough to say how much everyone buys with 7% VAT or 19% VAT, we just calculated 50-50. 50% with 7% value added tax and 50% with 19% value added tax. So another 13 cents will be deducted from every euro you earn. And that's still not all. Because there are a million other taxes in Germany. Energy tax, tobacco tax, ground tax if you buy real estate, car tax, alcohol tax, the GEZ TV tax that everybody's complaining about, me included, inheritance tax, electricity tax, fun tax, that's why we Germans are always so moody, gambling tax, coffee tax. Shall I continue? I think you get the bottom line. Everything that can be taxed is taxed here in Germany. The Association of Taxpayers added another 8% in other taxes to the calculation, and that brings us to our final result. Out of every euro you earn here in Germany, 61 cents goes to the government and 39 cents go into your pocket. Don't spend it all at once. Jokes aside, seeing that you only get to keep 39 cents out of every euro that you earn here in Germany makes you probably pretty sad. It makes me pretty sad as well. And I don't want to leave you hanging like this, so here's what you can do to get happy again. Because while there are hefty deductions here in Germany, there's also a lot of ways to get your tax money back. There's this video with 5 tips to increase your net income without changing your gross salary. And there's also the replay of our latest live stream on that topic. Next live stream to increase your net income will be on October 14th. So mark the date in your calendars if you want to join. There's this video from a couple of weeks ago with 6 legal tax tricks that show you some cool deductions that you maybe haven't heard of before. And to go into detail on the biggest tax deductions by a large mile, here's a video on pensions level 1 and a video with 6 steps how to buy a rental property here in Germany. Nothing has more tax benefits in Germany than pensions and investing in rental properties. If all these videos get you confused what the right way is for you to improve your financial future, feel free to reach out and secure a free meeting with us. Hopefully this video didn't make you too sad. If so, just get hammered on the weekend and forget what I said. See you next week, everybody.